Mickey, what I found interesting this week was that the Fed hinted to a possible rate increase next month. The market didn't seem to react at all. What was your take?
I found that interesting as well because we've been talking for the past year about how at some point as interest rates increase, it's going to affect the market. And the opposite's happened where we know interest rates are going to go up and the market has just shrugged it off. And, I kind of think it's this love affair with the market that the market just keeps going higher, and people love when the market goes higher because we make money. So I think everyone's pushing the interest rates to the side and just not thinking about it. But at some point, and I don't know when, I'm not predicting when, but at some point they're going to raise rates again. And, people are going to start noticing that, wait a sec, I can now get 3.5% yield on a bond without any risk. So now my IBM stock that's paying 3% and I have stock risk, maybe I need to get out of this, and we will have a shift. But right now we have this just massive love affair with stocks that keep hitting all-time highs, and the news is good that people just have blinders on with the market and no one really cares about anything else because everything's going great. And, that's just human nature. It's the market's good and no one cares about the other stuff.
So I guess walk me through an investor's mindset then. Some may be saying, wow, if it's only a matter of time and this thing's going to hit, maybe I need to act right now. What do you say to them?
Well, then we get into the old theory of market timing, which again, we've seen and we know does not work. And, there's an old saying, you can't fight the tape. The market's going higher. We've seen it. It still wants to go higher. The indicators tell us it wants to go higher. The money's pushing the market higher. So we don't know when this is going to happen. It could be Tuesday. It could be a year from now because we don't know what the Fed's going to do. We don't know what the economic indicators are going to say. At some point it will happen. So with investors, we're staying the course again, which I've been saying for the past year. When the things start to change, that's when we make our change. We let the market tell us what it's doing to make our change. We don't try to jump in front of this train and get run over. And by making change now, you're going to get run over.
I guess some investors would consider themselves hesitant about waiting until the market starts to change and sort of getting on board the correction late. All of a sudden things happen and a week later is when they make a change from that one. How do you answer those type of concerns?
Well, a true correction is going to be 10, 20%. So for it to actually change, directions for us to make a move, we're talking maybe 2 or 3% and indices changing. So we're not waiting for it to drop 15% of a 20% correction before we say, hey, we're going to make a change. We're looking at lots of indicators that will change before we get close to the middle or the bottom of a move. You don't catch the top of a move, you don't catch the bottom of a move. You make a lot of money in the middle, and you're not trying to time it. You're waiting for indicators to tell you things are turning. So it's not about let's get ahead of this. It's about let things settle in and let's let them move, and then we'll be right there as it's moving.
So I guess seeing the market drop 1 or 2% in a correction for the average investor is really not a big deal.
Not at all. I mean, we've seen 2 and 3% drops followed by 2 weeks later, the market's up 3% above the previous high. That's where clients say, well, I'm going to wait for a correction now before I jump in. I'm going to wait for a 5% correction. Well, the market goes up 15%. Then it drops 3%. Do you want to buy at that correction? Well, you've already missed theoretically 12%.
Interesting times. I imagine that there's going to be investors who are really going to want to understand sort of the concept of market timing and why not to do it. For those who are interested, Mickey, give us your contact information again.
Always email me directly, Mickey, Mickey, at Envestim, Envestim.com. Follow us on Facebook or follow us on Twitter at Envestim1.